Discussions in this show should not be construed as specific recommendations or investment advice. Always consult your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, a broker dealer member FINRA SIPC. Advisory services through Cambridge Investment Research, Inc., a registered investment advisor. Cambridge and Houston First Financial Group are not affiliated.
Welcome to Money Matters with Chris Hensley, where we spotlight financial literacy issues in the Houston community and beyond. And now your host, Chris Hensley.
Good morning, everybody. Welcome to this special edition of Money Matters podcast. Ever wondered how the tumultuous events of financial world in 2023 affect you? Today, we're unraveling these mysteries from the astonishing collapse of the Silicon Valley Bank to the surprising twist in inflation, Federal Reserve policies, and the explosive growth that we've seen in AI this year. We've got it all covered with actionable advice for you. And, this episode, I really wanted to do something a little bit different. It's been years since I've done a solo episode, right? Just the idea of not having a guest interview this time and doing a wrap up episode for 2023. So we're not going to put a time constraint on it, but we're going to look at all of the different headlines that were the biggest headlines, right, for the 2023 year and really kind of break it down and how did it affect each and every one of us and maybe even get some actionable items. What can we do with this? So the first one that I wanted to start with is the Silicon Valley bank collapse, right? So this one, I'm going to take you back to spring break for me because this article really broke in in March, right? It was when we were all in spring break mode, right? And we had decided to go back to San Diego. During COVID, we planned a vacation to go to San Diego, but that did not work out for most people during COVID. We found ourselves in San Diego, but everything was shutting down around us, and we ended up, leaving halfway during the vacation, and instead of flying back, we drove back. Right, so 2023 was going to be our vacation redo for that. And as we were out in San Diego and we were enjoying the San Diego Zoo and really trying to have a good time there, I remember that Friday, right? This headline breaking about the Silicon Valley bank collapse. And we kind of just go through it, step by step here as far as what happened. March 8th, Silicon Valley announced a $1.8 billion loss on the sale of securities, including treasuries and mortgage bonds, which had lost significant value over previous year due to aggressive series of interest rate hikes at the Federal Reserve. So they're kind of blaming the Fed on this one, but we'll go to find out that there's more than just the Fed's interest rate hikes involved in this, right? There was some mismanagement there. Cryptocurrency had a hand in it, right? March 9th, shares of Silicon Valley Bank fell 60% in response to investor concern about the bank's distressed financial position. And I remember my phone starting to blow up. I was in California when this was going on, but as an investment advisor, the financial sector is one of those areas where even if it's a small regional bank, you're going to see sympathy pains when something this big happens. So people started asking questions, right? What's going on? What's going on? Um, and then by the weekend, this was one of those things where they had an emergency meeting, right? The administration called in some of the CEOs from some of the biggest banks. And, at one point it was, is this bank going to collapse? And then by Monday morning, they had met and they had found a buyer, right? And so I remember them saying, that the FDIC was going to cover the initial depositors not to exceed the $250,000 limit. Oh no, I'm sorry. It would include those that exceed the $250,000 limit. So that was a big deal, right? When that happened. And then they eventually got it hashed out and they got it worked out. But, some of the takeaways from this, how does it translate to our everyday life, right? Um, some of the things that we need to take into consideration that's just good investment advice, right, is diversify your banking, right? So having, there's an argument for simplification, making sure that you can see how everything works and that you've got different accounts in one spot, right? But then there's the idea of the SIPC coverage and the FDIC insurance, right? And knowing that typically it's up to $250,000 per depositor, and so moving that around from different banks, if you are up at that limit, that's one way that we can learn from this, right? I know this didn't affect most people, but the Silicon Valley CEOs that had, $2 million and north of that, they were invested in this. This was a big deal, right? So, and it was a big deal for us when we heard this headline drop in early March. We've almost forgotten about it, but it really was a big deal at the beginning here, right? And then, what else can we do from this? So, understanding the FDIC insurance limits on each of our accounts, where we have our money at, what do we know about those limits, and just staying informed, right? Having your finger on the pulse, knowing what's going on in the market. This is one of those things as an active manager, I'm able to react real time. Other people have a kind of a buy and hold approach. And so each one is going to be different when it comes to how they would react to something like this in the market, right? Good. Okay, and let's go on to the next topic that I wanted to talk about. And this one is going to be, this is a biggie, right? This is going to be the inflation and Federal Reserve policies, right? So, this has been a thing all year, right? The Fed has been a thing all year. And we have what I call recency bias. Or even let's just call it amnesia, right? Because every time the Fed raises rates, the market goes down, and then it usually will get a pop. A couple of months after that, or a month after that, about 30 days after it, and we forget. This is the pattern that we see. Um, how has this affected us, over the 2023? So personally, I can remember the meme headlines coming up with the eggs, right? The price of eggs being super duper expensive when you go into the grocery store, people freaking out about the price of gas, right? These are all very real things that affect us on a day-to-day basis. We talk about inflation all the time, but no, many years inflation was somewhere between 3 to 4%. And so when we see it spike up, that is a big thing, right? And the Fed's really got only one tool in its toolbox. It can either lower rates or raise rates, right? And so one of the things that they've got a really hard job, right? It's a tough job. Um, it's an art, not a science, right? They're trying to find that sweet spot where interest rates are attractive enough to get people that, like myself, who will go to cash in downturns. Not across the board, but in certain sectors, I'll go to cash. And they're trying to get people like me to come off of the sidelines and go back into bonds, right? And I'm gonna, point people back to. Let me bring this up here. I'm going to point people back to episode number 120, where we had Dr. Robert Johnson on the show. Um, Dr. Johnson wrote a book called "Invest with the Fed," right? And so I strongly encourage people go back and listen to this, because none of this stuff should be a surprise, right? Right? We should. Um, I'm half joking here, but we should see a pattern here. Um, so the Fed's job is to get people who are in cash back into bonds, but what does that mean to us as an investor? If you look in these periods where they raise rates, your drag in your portfolio often is going to be the bond section, right? So you can look and you might see equities going up, but you'll see bonds going down, and people are shocked by that because they think, If I'm a conservative investor, they tell me to put money in bonds. Bonds can only go up. Well, straight bonds can only go up, but bond funds can actually go down, right? And they usually don't go down a whole bunch. It's like single digits. But in general, people aren't expecting that. And so that's something to know. It's something um, to take into consideration. What can we do? What are some actionable steps from the whole Fed thing? I mean, if we look at what's going on, this is today, right? This just happened in December. The Fed met again, and the picture's changed. Now we're standing steady on interest rates, and now there's even whispers on Wall Street that they might lower rates next year, or they might lower rates next year, right? Uh, and so that's good. That's a thing that we're not expecting, right? I'm sorry, raise interest rates. So because of what's happened with inflation, the idea that they're going to bump up interest rates again seems crazy. But that means that they've kind of got this soft landing, and that what they wanted to happen has actually started working, right? So what I would tell people is to reflect on past insights. I would definitely encourage you to go back to episode number 120, where we spoke with Robert Johnson about his book, Invest with the Fed, and it will give you some ideas of what happens when these interest rates things come up. It's not every year that it works like this. These are exception years, right? When they're raising interest rates on us, and it's going to affect the market. Reevaluate your finances, right? Reevaluate your finances, and it might be a good time to adjust your budget, investments, keeping in mind that potential rate hikes or decreases in the near future. How does that affect you, right? Build your emergency funds. So, if inflation's a thing and stuff costs more, having your cash reserves that you hear me talk about all the time, 3 to 6 months of living committed expenses. It's not a guess number. It's a number that we can work in backwards after we do our budget, right? We work into having that cash cushion of 3 to 6 months. Huge, huge. So, and then seeking expert guidance, right? If you have questions on this, if you look at your statement and you see that you're losing money in the bond funds and it doesn't make sense, ask for help. Reach out to somebody, financial advisor like myself, or anybody. If you're with Vanguard or Fidelity, they offer some free resources as well. So go through your employer sponsored retirement plan, and see what is free, and that you can use to help you kind of go through this. And then, definitely tap the shoulder of an expert if you need help as well. As we mark a decade of Money Matters podcast, I have a small favor to ask from each of you, our valued listeners. If you find our show insightful, head over to our YouTube channel and hit subscribe. Or if you're tuning in via Apple Podcasts or Spotify, we appreciate a review. And guess what? Now you can leave your thoughts directly on our new launched website via voicemail. We're also excited to announce our forays into sponsorships. We've partnered with Fiverr, a service I've personally relied on for years for marketing needs. Additionally, thrilled to be carried by babyboomer.org. We'll be promoting their legacy planning and caregiving courses as affiliates. So if you click on those links, you're directly supporting the growth of our podcast and helping us keep up with the latest technology cost. Your support means the world to us. Now back to the show. And let's go on to the third topic that I wanted to talk about, and that's AI, right? So this is the kind of what we would say the year of AI, right? But we talked with uh, Ravi Koka on episode 296, and he reminded us that this is not something that is brand new, right? AI has been rolled out. We've been working on this for 20 years or more. And, what we're seeing recently with ChatGPT and Claude and Bard and all of those are things that they've been built on the backs of pioneers like Ravi here. Um, but this has really been a game changer, as a business owner. I'll I'll share with you, my personal thoughts on AI, right? So I'm a contrary. If you haven't realized this by now, I'm a contrarian thinker. A lot of times, if I hear stuff, I'll have to see, like, I don't know. We're all sick of AI by now, right? It's one of these things that's gotten in the headlines, and we've heard it, we've heard it, we've heard it. But this is one of those things that I did have to go back and look at and examine and decide, am I going to partake right in AI, right? Because it is a very real thing. In fact, I kind of got on it as I'm late to the party here, right? Um, AI has been one of these things that's been a game changer for both the podcast and for my business, right? So I decided to go all in on AI. I went out and got a data analytics certification through Vanderbilt. This is if you're a spreadsheet nerd like myself, or you like visualizations, this is a different way than just the prompt engineering where you can look at AI. But for the just for the day-to-day practice, I've got a team of two. It's me and my assistant Maria. It's allowed us to use AI as a leverage point where we can compete with these larger companies, right? We don't have to wait for a team of 12 to make a decision. We can act real time, the two of us, and that the advantage of AI is that there's many things that we're able to automate, doing research, day-to-day things that we're able to do, right? On the podcast side, it's huge. So you've probably seen a bump in the amount of stuff that I've been putting out. If it is kind of annoying, these emoticons that are on there. When ChatGPT writes it, it puts all these emoticons on there. So that's kind of the telltale thing. And so I'm not going to insult your intelligence and say that we're not using AI. We are. And guess what? A lot of other people are as well. This is a thing that's here to stay, right? But we call it human assisted, right? Because AI can't really do anything without us guiding it and pointing it in the right direction. And, there is the ethics of it, but I look at it as any technology. A lot of times we're going to have to go back and put guardrails on it, but the train's already left the station, right? I would encourage people for actionable tip. Embrace AI tools. If you're a business owner, even if you're just you're not a business owner, but in your current career, right? Think about how many positions. That's one of the risks, right? That AI is going to come in and replace roles that we're currently doing. But that risk has been around forever. As we age and we get older, we evolve. Technology evolves. Our roles evolve, and we've always had to retool and relearn and keep up with technology. So this is not a new thing. And if anything that somebody who's forward looking and we can see the writing on the wall, this stuff is already in Microsoft Word. It's everywhere that we look, we're seeing AI come on board. So I encourage people to get out of their comfort zone and embrace the tools to go out and learn about it. The course that I just mentioned to you earlier, that Vanderbilt University, that's through Coursera. It was free. They also have one that I'm in the process of taking on prompt engineering, which is also free. So those are two really good ones that I can point you in the way. Be agile. Use AI to make quick, informed decisions, especially in marketing. If you're a business owner, and then listen to the experts. So I would again let me pull up Ravi's information here. I would encourage you to listen to episode 296. And we are right here towards the end. What I want to do is take this time to share with listeners some of the things that we're going to be doing in 2024. I want to give you a huge thank you to all who've joined us and dissecting these twists and turns of 2023. Remember, each piece of knowledge is a step towards your financial success. If our show has given you insights, please subscribe, leave a review, or even better, drop us a voicemail with your questions or comments. And our new website features this voicemail thing on the side of it that you can use. Your voice matters to us, and we'd love to address your financial curiosities in upcoming episodes. Stay connected for more empowering content. And until next time, keep navigating your financial journey with confidence. Thank you for being part of the Money Matters podcast family.